Good evening everyone. Welcome to this session on carry trades. Okay. Last week on last Friday I had created a video of carry trades on dollar INR, how the forward premiums vis-a-vis how that works with the rupee weakening over last 5-6 years compared to the last 20-25 years. So very interesting findings that we had in the video that we created last Friday. Okay, do look at it. About carry trades on dollar INR. But today we are going to talk far more interesting something about carry trades in euro and JPY. Okay, how forward premiums in euro INR have behaved with the natural rupee weakening against the euro or against the JPY. Okay, Japanese yen. So let's look at it one by one. So first we will look at euro. Okay. So when we talk about carry trades, we need to look at two different perspectives. First perspective is the long term, last 5, 10, 15 years, and the second perspective is the recent phenomena, 1, 2, 3, 4 years. Okay. So this is the long term euro INR chart. I have started from 2010. Okay, if you can see from here, it is from 2010, September 2010 till September 2025. Okay, so this is the long term euro INR chart, and if you look at this white trend line, we can very easily see that it is a consistent uptrend. Okay, and if you look at these vertical yellow lines, these vertical yellow lines say or at least indicate that this is September 10. So from September 10 to September 25 it is 15 years, and this vertical line is September 15. So from September 15 to September 25 is 10 years. Okay, so from here it is 5 years, here it is 3, 2 and 1 year. Okay, so these vertical line indicates from long periods till to now, and these are the shorter periods. So this is 15, 10 and 5, then 3 to 1. Okay, so this is on the euro INR. Similarly, we look at a similar chart for JPY INR. Okay, this is far more interesting. Again, same logic that I am starting from September 10 to September 25. So this is 15 years, this is 10 years, this is 5 years and this is 3 to 1. But if you look at JPY INR, it has been far more volatile two directions. Okay, it has gone up, it has come down, gone up and come down. Unlike Euro INR, which was mostly unidirectional upward, this is more direction both sides. And but still we have some kind of an uptrend, prices have generally gone higher. Okay, so how has carry or the comparison between forward premium of euro INR and JPY INR compared with actual weakening of the rupee against those currencies? Okay, so let us come to the table, the final table, where I will show you how this actually works. Okay, so let me get my marker. I will explain one by one. Look at it here. Okay, so the blue one is the dollar INR. This we have already covered in the last video. Please have a look at it, that particular video, very thoughtful insights. Today we are going to talk about euro, which is in orange, and JPY, which is in green. Okay, now look at it how we have covered it. So these buckets are short term, okay, not short term, last 1 to 3 years. So like more medium term, this bucket on the top, the bucket on below is long term. Okay, so this is 15 years, 10 years, 5 years. So now let us look at it one by one. So if you look at euro INR, in the last 1 year, euro INR has gone up very high. There is a very big weakening and the premiums have been much lower, so the carry is negative. Okay, so the carry is negative. Now, if you look at it 2 years ago, it is still negative, and if you look at it 3 years ago, it is still negative 5.5. Okay, it is still negative 5.5. Now, what does that mean? That means in the recent last 1, 2 to 3 years, the carry in euro INR has been negative. But if you look at it in a longer period, the 5, 10 and 15 years, it has been slightly different. The carry is positive in 5 years, the carry is also positive in 10 years, this one 2.4, and it is certainly positive in the last 15 years, which is 2.5 here. Okay. So what does this tend to indicate? This tends to indicate that all those companies who have converted INR loans to euro and have kept it unhedged, they would have had very heavy currency cost in the last 1 to 3 years. Okay, because you are not hedging it, you are repaying at a much higher euro price compared to the savings that you were envisaging to do. Okay, you have not hedged your currencies and the currencies have gone against. That is why all these negative numbers will have a very big impact on your financial statements. But if you are looking at very long term, then euro has had positive carry and the numbers might look positive. So that is how the market dynamics have changed. In the longer term, there was a carry, so it made sense to convert your INR, high cost INR loans to euro loans and keep your positions, repayments unhedged. But in the last 3 years, this has flipped and the hedge costs have been lower and the actual weakening of rupee against the euro has been much higher. So if you have kept unhedged positions in your loans, then in your euro loans, then that has become heavily out of the money and then you are incurring very high foreign currency repayment costs. Okay, so that is how things have flipped in euro INR. Now let's look at far more interesting on JPY. Okay, all of us know Japanese yen, Japan is like almost a zero interest rate economy and Indian interest rates have been higher, so the hedge cost is very large. Okay, so if you look at the average hedge cost, it has been around 6% most of the time. Okay, even if you look at short term, long term, really long term, okay, all the hedge costs have been around 6.5%. Okay, 6.5%. But how has the weakening happened? Has rupee really weakened against the yen? Let's have a look. So if you look at last 1 year, it is just around 3.5% of weakening, which means 6.5 to 3.5, almost 3% of carry. Let's look at it for last 2 years, again 3.5 to 4% of carry. If you look at it for 5 years, it's almost 5% of carry. Okay, and if you look at longer periods, the carry still continues here, here, okay, and here as well. Okay, so for JPY INR, the carry has predominantly been positive, and that is one of the reasons. If you look at it, the chart that I showed here, okay, let me just cross this chart that I showed here, it has gone up, but we have seen mostly two-way movements. Two-way movements means it has not gone up very high. Even if it has gone up very high, it has come down. Okay, so generally in the JPY INR case, if you have converted your INR loans into JPY, the carry has been consistently positive. Okay, rupee has weakened against the yen, but it has gained against the yen as well. So on a long term basis, the carry has been consistently positive. So what does that lead to? We looked at dollar INR in the last video and we saw that the carry has gone negative for the dollar INR, and it is, if you look at it here in case of euro INR, it is heavily negative in the last 1 to 2, 3 years, but in long term it is positive. But for JPY INR, it has been consistently positive for last 1 to 3 years and also for a longer term. Okay, so what does that lead to as a conclusion? The conclusion is that if you want to take advantage of carry trades, you can convert your INR loans into JPY and could look at keeping the positions unhedged because the hedge cost is very high and the rupee weakening is less. Okay. Now the next step, the next efficiency that you can get into that system is that if JPY does go in the money heavily after you take a drawdown in JPY and you have already saved, then you can look to hedge for shorter periods. Okay, but overall the carry trade works very well for JPY, but for euro and for dollar it's not working that well, especially in the last 3, 4, 5 years. So that is the conclusion on carry trades for various currencies, and that's it from my side. If you need more such insights on forex markets, please join our WhatsApp community.